That's why. Hello. All right, let me see. Hello, hello, hello. All right, now it's working. I think I had because I had the mute on. All right. So yeah, so I have to start the live stream over because my last live stream, the mute was on, but I can't believe it was on. That's weird. I never touched that button, so I'm not sure why it was on. But anyway, so yeah, I have a couple more days before, or a few more days before I go off to Italy, which is Wednesday. So today I have the day off and I have tomorrow off. I have the whole week off. And I was saying in my last live stream, which didn't have any value, was that I'm realizing how much cars cost today. So right now I currently lease a Lexus, and most of you would say, oh yeah, obviously a Lexus is a lot more expensive, so on and so forth. But the it's easier for me to maintain a car with the lease because again, I don't have to pay for any of the expenses. I don't have to pay for the first few oil changes, which is basically up to 10,000 miles. I don't have to pay for the oil changes. If there's anything major that the car needs, I don't have to pay for it. So that is a benefit of leasing, and I've been leasing for the last 6 to 7 years, all IS300s, all Lexuses. But for me, I want to just get rid of this car payment. I don't want to be paying so much a month for a car. I just recently did my paid for my insurance, which was $800. Now I must say the insurance is not as expensive as it used to be because my last premium for my insurance was about $1,160. This premium, this 6 months, I paid $800. But with my car note, I'm paying about $560. Yeah, about $560 a month. If you take $800, divide that by 6, that's around 120. So you're looking at around $700. Add on an additional $200 a month for gas. I'm paying about $900 with insurance, gas, car a month. So around $900. And my car really just sits in the garage, right? So I'm not really using it a lot. I'm not using my car a lot, and I'm paying a lot of money. So my first Lexus, I was paying $420, right, a month. And then I did a second lease, and I was paying around $490. Now this one's $561. So you could see, and this was from 2000 all the way to 2026. So progressively, it's just getting more expensive to own a vehicle, right? And if you look at the gas prices, it's ridiculous. I mean, 93 would get you, it's over $4 a gallon. So, and then 87, I mean, you're looking at close to $4 too. I mean, it may be a little bit lower, but when you're talking about those, a little step up from a Toyota Lexus, they recommend that you put the better gas because it'll mess up the engine. Now, obviously it's a lease. I don't really care what happens to the car, but I don't want anything to happen to it while I'm driving it. And yeah, they'll pay for it, but then that's just more time that's coming out of my day that I have to go fix the car. So I got to put the good gas in my vehicle. One, because they recommend it. Two, I don't want to be inconvenienced, and I don't want the car to break down. So yeah, that's what I did today. I went to the dealership to get my oil change. They wanted to do an alignment on the car, but it was like $330. I was like, no, I'll just do the oil change and then the tire rotation, and that cost me around 120, which I was fine with that. Now I remember maybe back in 2000, 2021, you could get an oil change for like 40, $50, and maybe even cheaper, $30, right? Depending on where you go. If you go to one of those cheap cheap garages, they could probably do it, or you could do it yourself, buy the oil yourself. But I don't want to do that. I wouldn't. I never change my own oil. I would just pay like a small garage to change it for 30 to 40 bucks. So, but yeah, I say all that to say I'm going to transition to an electric vehicle once this vehicle's lease is up, which is in 2027, and I'm looking to get a used electric vehicle, maybe 5 to 10,000 miles, but I'm looking to keep this thing for 10 to 15 years and then just ride out with it. Because one, I'm not going to pay any gas because it's going to be a electric vehicle, and then I'm paying it off cash, so I don't have to worry about the monthly expense. And obviously, once you own the car outright, you don't have to get full coverage, which I think that's a good thing. I hate paying for insurance. I don't use it. I'm paying a lot of money for it every 6 months, and then when I do need to use it, it's like they're fighting you to pay for something or pay off some type of damage, right? It's like a back and forth. So, yeah, that's my plan with that. But let's get into the market update. I just wanted to give you guys an update of that. That's basically what I talked about before my live stream cut out on the last one. Okay. So let's get into the market update. So far, Monday, August 17th, the US market is basically choppy slash flat rather than making a major move. S&P roughly down 0.2%, Dow roughly down 0.2%, and the NASDAQ roughly down 0.3%. Now, the market is it's not over. I'm just doing this update in the middle of the day. But the market closes at 4. This can change. Maybe the market ends up for the day. It's not, it's only the S&P is only down like negative 0.2%. So we got an hour and a half left in the day. Stuff can still happen, right? Now, the reason why I believe this is the case is because oil prices are up. The WTI oil is around $83 per barrel, so up 0.6% for the day. And when oil prices are up, that usually means that we're still having these tensions, right? The Iran and U.S. tension, and that causes oil prices to go up and equities to suffer a little bit, right? Now, what also went up is the U.S. Treasury. So the 10-year Treasury is around 4.71%. Now, that was at like 4.68%. So I think it was down like 3 basis points a couple of days ago, but now it's up 3 basis points. And that's probably tied to oil prices going up as well, right? And what I learned the other day was when it comes to your interest rate on your mortgage, they basically use the 10-year Treasury as the basis, because they don't use a 30-year Treasury, because most people that get a mortgage, it's 30 years, but they typically end up refinancing and selling off their house way before the 30 years is up. So the 10-year Treasury is another asset to gauge what rates mortgage rates should be, right? So if the 10-year Treasury is 4.71%, mortgage like banks that provide mortgage loans usually require a 2 to 3% extra for the additional risk, right? May foreclose on the loan, they may not pay the loan, opposed to a Treasury yield where you're getting that guaranteed 4.7%. It's backed by the U.S. government, right? Now I'm trying to see, did somebody, no, okay. Let's see this. Yeah, I don't know. It's hard to see anything here. But yeah, so that's essentially why they require an additional 2 to 3% for mortgages on top of the Treasury yield, because they're taking on a risk to take on from lending you that mortgage loan, right? All right. So the biggest things today is rates. Treasury yields are pushing higher, particularly at the long end. even though expectations for another near-term Fed hike have actually fallen. Now, the reason why has fell is because we got some recent good CPI numbers, some good readings. The CPI core, I believe, came in at 3.4, and I think last month it was 3.5. So came in at expectation, and it also showed that it was cooling down. And then I think PPI was flat this week. And remember, last month we got a good favorable CPI reading as well. Also, we got the fact that we lost like 23,000 jobs in the last job report. It said that we lost 23,000 jobs. So that is something that's going to keep the Fed tied up in not increasing interest rates. They can't increase interest rates if inflation shows that it's cooling down, and then also they can't increase inflation or in interest rates if we're losing jobs. That's not good for the economy, right? Because if you increase interest rates while we're losing jobs, then companies are not inclined to borrow any money at a high interest rate, and that money is used to hire more employees, bring in more production. But you can't do that with high interest rates. So even though inflation's going up slightly, we're still getting favorable readings, and we're getting job numbers that support holding rates steady. At least we may not get a rate cut, but at least we hold rates steady and we don't go up, right? And again, this is all good for stocks, right? If you're invested in stocks, if you're not invested in stocks, then this may not mean anything to you, or a crypto, right? Because the stocks in crypto kind of move at the same pace. Now, you do have periods where crypto will outperform stocks, and then obviously we just had a period where stocks outperform crypto, specifically the AI stock market portion of the market. But yeah, most of the time they move in sync. So if the stock market is going up, crypto is usually going up, right? Okay, tech is holding up better than the broader market. AI optimism remains supportive. While the Dow and more rate-sensitive areas are having a harder time, that's keeping the market from selling off materially despite the rise in yields. Yeah, and AI is going to continue to be the sector that people pay attention to. I'm not sure if you guys are familiar with OpenRouter, but I'm not sure if it's OpenRouter or OpenRouter, but it's basically a platform where people can provide their open models and have them compete. And the amount of token usage is going up substantially. And I'm talking about, so when you're using an AI model, they measure it by the tokens that are used. So I don't know exactly how much tokens are used when you run like a prompt through ChatGPT or whatever the case may be, but it's measured by tokens. And you could see a lot of these models getting billions of tokens used on a daily basis, and it's just going to continue increasing. I use ChatGPT almost on a daily basis, and I mean, I use it for everything: deep conversations to understand certain subjects, topics, analyze the market, do analysis, all type of stuff. And at my job, they're using Copilot, and all these other places are using Copilot and Claude, and it's just a substantial use of these AI models, and it's not going to slow down. You can just imagine when the AI agent and robotic thing just takes over, where everybody's using an AI agent, somebody's using a robot of some sort. That's just going to need continuous compute, and it's just going to run, it's going to use billions, trillions of tokens. So that is a sector, tech, it says tech holding up better than the broad, and it's because of AI optimism, right? And with that being said, we do have NVIDIA reporting earnings on the 28th and the 29th. So that's going to be big for the market. Now, we usually get a run up to NVIDIA earnings and then a sell off. That's usually how it goes. So we'll see what the market does. But usually we sell off around NVIDIA earnings because it's kind of like they hype it up and then they sell it off. Okay. So, okay, and the last thing right here, and then I'm going to be done. Or basically, this week we're waiting on major retailers to um, support rate report earnings. So they're going to report earnings, and it's Walmart, Target, Home Depot. And the reason why this is important compared to any other company that reports earnings is because these are our major consumers. When you go out and you want to buy something for the house, it's usually at Walmart, Target, or Home Depot. And if those earnings come out and they say, okay, um, they're not doing well, or they're not reporting really good earnings, or they're not earning much, it suggests that consumers are not spending their money. And if consumers are not spending their money, that means, along with not enough jobs reported, we lost 23,000 jobs. Along with that, that is not supportive of rate hikes. So again, we don't want to see companies doing bad, but if they are doing bad, it kind of, again, locks the Fed up. Like if Walmart was to report tomorrow that they're bankrupt or something like that, it would be a shocker to like the Fed. I'm pretty sure they keep up with those type of things. It's like, wow, I mean, all of our consumers shop here on a daily basis, and Walmart's going bankrupt. What's going on? Like, is anybody buying? Or how are they losing money? Now, it could be that they all, transitioned to Amazon and bought all their stuff on Amazon, but that's typically not the case. But I'm just giving an example. But yeah, that's pretty much the update. Again, the market is not closed. We still got an hour and a half left. But that's pretty much it. I'll see you guys in the next one. Take care.